Good morning, everyone. Welcome to the Stock Market Morning Prep video for Thursday, January 15th. Markets are moving, volatility is here, and that's what we want to see as active traders. So we want to pay attention to what this move is, how this move is happening right now. We are at key support levels. Today, tomorrow is going to be critical. I'm going to point them out again, and then let's look at some of these indicators to see if we get any of these washout levels where we would be looking for some sort of a bounce like we've identified the last couple of bottoms. We don't want to be picking bottoms, but we want to watch for the retracement. If the retracement has some oomph to it, if you will, some volume behind it, maybe we are possibly looking at least test these highs. We're not there yet. It's too early to tell. Today, tomorrow, probably going into Monday will really be a deciding factor. We've had some weakness in January, and we look for the so-called January effect. If the first 5 or 6 days, 7 days are weak, usually the rest of the year becomes choppy and weak as well. But again, that's just hearsay, so don't take that as a trading. But let's make a couple of key points here. Last night, the Swiss Central Bank removed its ceiling, or peg, if you will, at 120 on the euro for the last couple of years. That rattled markets pretty big. And markets are recovering right now, but we also have crude oil back above $50, that's pretty big. And if oil can stabilize and rally, I think you're going to get a rally here in equities in the next couple of days as well. Okay, let's keep an eye on that. Let's also look at some of these indicators, and of course we'll go over our 5 indices that we follow. Now in front of you we have copper, and this is very, very disturbing. As we all know, Dr. Copper, the industrial metal, copper is in a lot of many products, and when copper starts to sell off like this, and really selling off hard, and you can see this here, this is actually a very bad sign of slowing growth in the world economies that we have, right? Right now, people are not really, and traders obviously are not really paying attention to it. I don't hear it a lot in the pundits that on CNBC and Fox Business News, but you got to pay attention to this. This is actually very, very important here. Now, if it stabilizes and starts to rally up again, I think it's just going to be ignored. But if this continues or we bounce and fail again, have to watch. It's very, very important here, okay? Now, let's take a look at some of these indicators. McClellan Oscillator, very, very reliable. We have the Bollinger Bands here, and every time we get to that Bollinger Band on the downside or to the upside, we look for either a bounce or obviously look to sell the market. And that now hasn't happened as of yet. We're only negative 25. We have plenty of room to run to the downside. So if this market were to get some steam to the downside, there's plenty of room to run before we become oversold. Okay, so just keep that in mind. The advanced decline with volume, we're not quite there in that washout level. So keep an eye on these areas here, negative 22, 225. We get down to these areas, and a lot of these other indicators do as well. Then I could say, I could point out that, listen, guys, be careful for a bounce. We're not there yet. The stock's above the 50-day moving average. As you can see, we're just right around this area here. We're getting to a point where we could possibly bounce, but I like to see a break below 30. Anywhere below 30 here, as you can see, the last couple of times we've rallied. So just keep that in mind. Watch some of these indicators if you can find them, or if you have them, definitely pay attention to them because they're really, really reliable. Okay. Now the VIX. As if you've been following me on these videos, I always like to look at the VIX, and every time we get outside of the Bollinger Band and we close back in it, that's a buy signal for the market and a sell signal for the VIX. We are not there yet. As you can see, we do have a black candle, which means a little possible for a retracement lower, so that could happen and help the markets here today bounce. However, we don't have that at this time. We just don't have it yet. We're outside of the band. We opened outside the band, but we closed back in it again. So we really need to close outside the band, close back in the band, and then that will produce a buy signal for the stock market. Right now it's not there. I think it has plenty of room to run here before it becomes really, really stretched. So let's keep an eye on the VIX. The VIX is going to be a really good sign as well. Okay. Now I want to show you some of these indicators. Some of the indices. Keep an eye on these levels here. Okay. We are there now. We had a little bit of that gap area of support. We actually broke below it and closed right on it, so that area is filled. Now, the spiders can actually either move up or decide to look at the 200-day moving average. The next downside target would be the 200-day moving average in the spiders. You might want to write that down, 197.35, as a next downside target. So this target has been met. The gap has been filled. Next target to the downside, 197.35 in the SPYs. Okay, now IWM, not quite there. We are just about at the 200-day moving average, 115.03. You might want to write that down for further downside targets. And again, look at how sloppy the Russell has been in the last couple of sessions. So again, keep an eye on these levels. Very important. Diamonds basically hit our target. I mean, within a couple of pennies. And I could almost say that fill the gap here. But we're bounced back above it. 172 and then 170.74 would be your next downside target. Again, being that 200-day moving average. Okay. And lastly is the Qs. Now, one more before that. The Qs actually hit our downside target again, filled the gap, as you can see here. Next target would be, and it's a little bit away, 96.13. Again, that 200-day moving average. So keep an eye on this as you're trading during the course of the day. We start breaking down here. We can see a quick move, guys. Volume profiles, volume zones, they're all thin. So when that happens, price just sucks right down to the next support area. So this is actually very disturbing. We'll see if we get there. Possibly if the markets can stabilize and hold today, and if crude is going to hold this area, then I really do think that that we should see some movement back to the upside, at least a retracement back up, and then we'll reevaluate it again. And the transports, very, very disturbing. We are basically clinging to that 50% Fibonacci retracement. Again, look at this thin zone here. Once we break, we're going to flush right back down to this 200-day moving average, 149.26 in the IYT. So please write that down. Be aware of what's going on around you guys, because markets are fast. Volatility is high. A lot of opportunity to make money, but also if you don't keep your stops in place, you can really do some damage to your trading account. All right, so definitely keep your stops in place and adhere to your trading plan. Have a great day. We'll speak to you tomorrow. Take care, everybody.